3, 2, 1, go.
Good morning.
Good morning, everyone. Welcome back to another episode of our Sunday question and answer video. We are back on the road here. And should we announce? Okay, so this week should we announce a schedule to schedule shift that's going to be happening? No?
I don't think so.
No announcements. Okay,
Big surprise. Big surprise.
So
You're on a need to know basis.
Yeah, so let's get right into the questions here. So the first question comes from Eshkin Kot 1, and they say, "What does it mean to take money from your house?"
You go in, you open up the drawers, you look under, you see wherever it's hidden, you take it.
Take it out of your house.
Take it out of your house. Put it in your car. Are you going to answer that, buddy? Or
you can answer.
I can answer it?
Yeah.
You're basically taking a loan and your house is the collateral. The most common, what most people refer to a HELOC, a home equity line of credit. It's basically a loan against your home. Your home is the equity, and so there's a lien. You pull out $50,000 to do some renovations, $100,000 to do some renovations, or to put a down payment on another property. Ew, scary, eh? But basically, that's what you're doing. You rack up a bunch of debts, but you've got $300,000, $400,000, $500,000 in equity in your home. Equity would be what it's worth.
Let's give them an example. So you have $1 million home, and let's say you have a mortgage. You bought it for your mortgage was $800,000. So you'd put $200,000 down payment, and you have $800,000 mortgage. So over the years, let's say after 20 years, you've paid it down to $200,000. I don't know, whatever. And so now your home, let's say if it didn't increase in value, it's still valued at $1 million. Your mortgage is $200,000. So you can go to the bank and say, "Hey, I'd like to take out some money on my house in order to, again, do renovations, down payment on something else," or whatever.
Sounds like
whatever
something I just said.
Yeah, but it's taking extra money outside of your mortgage that you can actually use, because your mortgage money you can't necessarily use. That gets directed straight to the house, right?
Right.
Yeah. So that's what it means to take money from your house. But okay, next comment here comes from Frenzy Bar 7936.
Frenzy Bar.
And Frenzy Bar says, "Santo Domingo. Westerners look down on the custom of haggling down the price in some countries, yet here it is expected to haggle the prices up. What an extremely asinine thing."
So haggling the price up is not in every situation. We're talking buying houses, I would assume. This is a real estate channel. So if we're talking about haggling up, it really boils down to the pricing strategy. If the house is estimated to sell for $1 million, for example, and you price it at $800,000, what you're looking for as the seller is the auction effect. You're not going to accept 800 or 900. You want to be around $1 million. So if offers come in at 8, another one comes in at 850, another one at 9, that's kind of what you're expecting. And when we talk about that, it drives a lot of people insane, because they'll look at the list price and just automatically offer that or less. They haven't done the research. I'm not telling you I agree with this type of pricing strategy. I don't like it as much as you don't like it, because there's also a lot of sellers that are unrealistic in what they list it at and still expect more. That's just unrealistic. And that's going to happen at any market, at any time, at any moment. We're never going to get away with that. But that's, it's haggling up, haggling down. It really depends on the pricing strategy. We've all seen the clips of homes being sold in Australia where they have an auction. The buyers are all on the front lawn, and it's an auction basically. And there's a starting price, and the buyers are saying, I'll go higher. And they bid the price up, and it's normal business there. Here it's a bit different, but similar.
Yeah. Okay, so next comment here comes from Mirzad Rashid Khani. And Mirzad Rashid Khani says, "Good morning, gentlemen."
Good morning.
Good morning. Where do you see the rest of the real estate? Or where do you see the real estate for single family homes heading for the rest of the year / early next year? Your favorite predictions.
I love predictions. Where do you see things going?
I don't know. I don't think he asked me. I don't think he asked me. I think he asked you.
You know, I'm not excited about making predictions just because the opportunity to be wrong really is high. And I know people are relying on some of the things that we say. People are counting on it and counting us to be right. But there's so many variables. But I am fairly comfortable in saying I don't expect there to be a lot of change from where we are now between this year and middle of next year, I would say.
Yeah.
I see it being kind of similar. And if it's not, and things go up, down drastically, that's the market.
Yeah.
What can you do? It's all based on consumer confidence. Now, there's things that affect consumer confidence, but at the end of the day, it's all about consumer confidence, and that could change on a whim.
Yeah. So what makes me nervous about a question like this is it's a pretty specific timeline. And so it sounds
like an expiry date on a model.
It sounds like he's asking for a specific purpose of maybe he has a property that he's looking to sell and he's trying to time it. So
what most people do is keep asking around until they find somebody that predicts what they want to hear.
Yeah.
And then they, base their decisions on that. So if you're going to do that, if you're going to transact, buy or sell based on a prediction you've heard, just, make sure there's a big gray area to adapt if things go differently.
Mm-hmm. So basically, be careful taking the advice you just gave.
Be careful taking the advice I just gave you. The minute we're talking about predicting the future, nobody can. I know lots of people do that and are prepared to do that.
Yeah.
But go back and check to see how many times they're actually right.
Yeah. Okay. So next comment here comes from, there's no vowels in this. Is Y a vowel? Y is a vowel sometimes, right?
Sometimes Y, yeah. E-I-O-U and sometimes Y. Yeah. I remember that.
Right? Okay.
I remember that.
I was about to say there's no vowels there, but there's one.
School.
Sithiman says, "You guys always look happy and complacent. A miracle in these times." Thank you. We do. We like to try and stay positive. Although there was someone that said that you
I'm more charming.
After we clarify, you still are more charming, and it's because you smile in your throughout the videos. When I'm talking, you're smiling.
You got to smile more.
I don't know if you caught it, but I just that thought popped into my head while you were answering the previous question, so I started smiling. Yeah, I don't know. My resting face is very serious. I've been told that it's not that friendly, but I promise you, I am happy.
A long time ago, I was taught what you think comes out. So think good thoughts and you'll automatically look happier.
Yeah, but I think good thoughts and I don't look happy. I don't know. I've been told I remember, funny little story here. When I was in university, I met my partner now in university, and I met her in my first year in university. And then we didn't talk until the last year of university, where we had a class together in the first year, and then we had a class together in the last year. And she mentioned to me that she was terrified of me because of my face.
What do they call that? A resting face? Yeah. I don't want to say it here.
I got to try not to do that. But yeah, no.
Keeping this channel rated G.
Yeah. But
rated G, is that rating?
I'm always usually in a good mood unless my dad annoys me. But next comment here comes from Deborah Perez. So Deborah Perez says, "This is very informative. When do you think condo prices would recover, if ever? We bought our daughter a pre-con back end of 2022 for college.
No, say it isn't
Since she's starting next fall, 2026. It was $1,300 a square foot, 1 bedroom in downtown East End, as it was the best deal in the city at the time." Crazy to think that was the best deal in the city at the time. "By the time it closes, it's probably down a lot. We initially thought by the time she finishes uni in 2030 or 2031, the price would have appreciated quite a bit and she would have a place to live for 4 years before selling. Now, not so sure. What's the chance you think we'll see some kind of recovery by then? At least break even. Thanks."
First of all, let me say lots and lots and lots of people thought exactly the way you did. That, look, she's going to need a place to live anyways. We can afford to buy. And by the time she's done university and maybe doesn't need it, she'll sell it at profit. What a great idea. And for many years, it worked out to the T exactly like that for many years until it doesn't anymore. Mm-hmm. And now attitudes and strategies have to change. So do you want me to keep going with this? Do you want to go from here?
Well, I think just this is one of the reasons whenever we talk to people that buy condos, this is, I would say, probably on the list of one of the good reasons to buy a condo. We see quite a few parents that do exactly this, right? They'll buy their kids a condo for school. And then, I think your daughter needs to stay in school a little bit longer.
She's got to go for her master's, and then what's after that?
PhD.
Yeah. And then after all that, change subjects and start all over again.
Then you might be good.
Keep her in school longer.
But in all seriousness, I think that, it doesn't sound like there's any. One of the biggest problems right now is struggling to close and then struggling to maintain. But it sounds here like the closing is not an issue. It sounds here like maintaining it is not an issue.
We're assuming you can afford to keep the condo, and I guess their
concern is what's it going to be worth at the end of the time that she's done using it.
Yeah.
Right. So I would imagine in that case, then closing is not an issue. Maintaining the cost is not an issue. So I would just say, in a situation like this, just keep it and see what happens. I mean, if she lives there after university for a few years, I mean, it's not the worst thing in the world. Right?
I wouldn't worry about it.
Yeah.
I'm not saying everything's going to be great and you're going to sell at a profit when she's done, but what choice do you have now?
Yeah.
You're committed. You've got, we know if you try to sell now or when it's ready, we know you're losing your shirt.
Mm.
So if you don't want to deal with that, you're losing your shirt and you still got to find her a place to live and you pay rent. So if you can afford to close and keep it, deal with it in 4 or 5 years. Who knows where the market's going to be there? Maybe it'll be favorable for you to do what you were planning to do from the beginning.
Yeah.
I wouldn't worry about it.
But this does sound like
you don't have a choice.
Yeah, exactly. This does sound like one of the good situations to be in when it comes to condos. So
I think you mean good intentions.
No, but it does sound like one of the good situations. Like I said, it doesn't sound like they're going to struggle to make the payments, and it doesn't sound like there's a problem with closing. So, I feel like all the condo, anytime we speak to someone that has a condo situation, it's just like, fire needs to put it out right away, type thing.
Yeah, I can't even afford to close. The appraisal doesn't come in properly.
So this is a breath of fresh air to hear that.
It actually comes, sorry, I got to say that again. Yeah. It's not that the appraisal doesn't come in properly. It came in properly, but not at the price you want.
The problem is it came in.
The problem is they actually appraised it. Yeah.
So, okay. Next comment here comes from Ed Sedlak. And I got to say, Ed said like, so I monitor the comments quite a bit. And I think Ed has an army of YouTube people, friends on YouTube that like his comments because Ed said lack always gets like 30 likes on his comments. And it could be just a regular, it could be a comment that someone else posted to, like very similar to a comment that someone else posted to. But for some reason, Ed said like always gets so many likes. And I thought that maybe it was like a bot or something because we get like, we'll have like a comment that says, "Oh, follow this lady on Telegram for the best investing advice." And those always get like
in crypto.
Yeah. And those always get like 60, 50, 60 likes and then a bunch of comments underneath. But this like is very specific to the video. So I don't think it is a bot, but he just has a ton of people that like his comments on every single video.
He's got a big family.
So he's got to be, yeah, probably. But anyways, Ed Sedlak says, after my divorce, it was tempting to sell the house and take whatever equity I had remaining, but I decided to hang on. That was probably the best decision I ever made because in the many years after the house appreciated in value, even though I still have a lot of debt, I ended up in a position where when it was time to sell, I had enough equity to buy a smaller house and live comfortably in retirement. I am definitely in the camp of hanging on tooth and nail to your house. I will acknowledge, however, that the market is different now, so that may play into people's decisions. For goodness sake, get rid of the fancy toys and the fancy cars long before you think of selling your house.
Good for you, Ed. I'm glad things worked out for you. Thank you for your comment. And we are in the same camp as you.
Yeah, that's exactly the point we were trying to get across in the video. I think a lot of people,
Ed did a better job than I did.
Yeah, he did a better job explaining. Well, I think he probably got more likes on his comment than we got on the videos. But that's exactly the point that we were trying to get across in the video. I think, a lot of people, when they get into some financial pressure, they press the reset button a little too early. And it's different situations. Like, this is not to say that, every situation you should hold on to your house, because there are some people that are, if you're over leveraged, you got nothing. Like, there's different situations.
Yeah.
But in cases where you do have a lot of equity and the house were to relieve the pressure right away, there's a long-term plan that needs to kind of be looked at before you press the go button on selling.
Keep the jet ski, keep the motorcycle, keep the, what else are you going to keep? Keep the helicopter.
Yeah.
But sell everything else.
Yeah. Keep the helicopter. If they got a helicopter, I don't think they need to sell the house.
Well, how are they going to get to the cottage?
That's true, right?
You don't want to get stuck in traffic.
You don't want to get stuck. You know what? We're on the 400 right now and we are breezing. We are breezing through traffic.
Yeah.
But anyways, next comment here comes from Sammy D'Souza. And Sammy says, I have followed this gentleman's advice several times over the years. He is correct far more than not.
Thank you. What do you mean? Far more than not?
Far more than not.
You're implying that I'm wrong sometimes. Buddy, you started off with a compliment and then it went sideways.
Yeah. So thank you for that, Sammy. Next comment here comes from R. Defashendis. And R. Defashendis says, question for the crowd. I've seen multiple single detached homes pop up for sale in the last 2 weeks. The worst time of year, in my view, to list a property. Would top reasons include death, divorce/separation, job loss, job transfer? Why else would anyone list in July? To have 3 in my community go for sale in July seems odd. I read this and I just thought there's going to be a new listing somewhere in the States for the CEO of the Astro Air whatever company that got caught at the Coldplay concert.
Yeah.
Or there might be 2 new listings that come up there in July. And yes, that would definitely, I think,
maybe he doesn't need a place to live anymore. He's just going to be a Coldplay groupie.
Yeah. I don't think he's going to concerts anymore in a very long time. But why would anyone list in July, Pa?
First of all those reasons that you mentioned are all possible reasons, but they're possible reasons at any time of the year. They're not specific to July. Job losses there could be an uptick in that these days as we're hearing more and more about that. He brought up something that has been on my mind also that I've been keeping an eye on.
Mm-hmm.
We are seeing, in general, more listings now when we should be trending down. They started, but then they kind of, the last couple of weeks, we've seen listings bounce up. And you're right. Typically at this time of the year,
those are saved for
people that are looking to be on the market now typically tend to wait for the fall. I'm not saying that that's the best strategy. I'm just saying that's what people do. I really don't know why we're seeing a lot more listings now than we usually do relative to what we see earlier in the spring. Well, I'm not sure. I think it's just timing. I think a lot of it has to do with sellers were holding out, waiting, holding out for things to change. They didn't. And they're like, let's get on the market. That's one. Also, quite a few of them are relists where they tried to sell in the spring. They have been on the market and they cancel and relist at a different price, hopefully at a different price.
Yeah.
And I think we're seeing a lot of that also. But there are more than what we would have normally seen.
Yeah. And so next comment here comes from Mint Incorporated. And Mint Incorporated says, unfortunately, the next people are the big luxury homeowners. How can they afford the property taxes? Every municipality keeps raising prices. People won't be able to afford property taxes in the future. We might start seeing more ghost towns or ghost neighborhoods. It's sad. So
I don't think that's the case.
We have this conversation a lot. And there's actually another comment here that we'll get into that is kind of related. But I think people vastly underestimate how much money there is in the GTA. How much money people have.
I would agree with that.
And I'm not talking about someone's home is worth $2 million and they have no mortgage and so they have access to money. I'm not talking about that. I'm talking about people that have extremely high paying jobs and have had extremely high paying jobs for a long time and have a ton of cash. I'm talking about people whose family have businesses that do multi-million dollars and there's so many people involved and benefit from that. Like there's just a lot of money in the city that I think people really underestimate that. A lot of people in these big luxury homes, for sure, there are people that overextend themselves. For sure, there are people that, there's foreign buyers that come here and buy up a lot of some of the big luxury homes. There are, let's say, how do we say, we'll say, I don't want to say money laundering, but like for sure there's a lot of different obscure ways of financing these big luxury homes, of getting into these big luxury homes. But you can't rule out the fact that there are just a lot of people with a lot of money in City of Toronto, in Vaughan, in Mississauga. Like it's not all proceeds of crime. It's not all money laundering. There are a lot of people with a lot of money, and property taxes are, a drop in the bucket for these people.
Absolutely. And
so
what a lot of people tend to do, what we tend to do as humans is we look at our situation and project it on everybody else that they're the same. So if a $20,000 a year property tax you feel is insane, it may not be insane to the person who's actually paying it.
Yeah.
Because you're in a whole different income bracket.
You're a different league, right? There's people that look at, a condo with property taxes of $3,000 and think, oh my God, how could someone pay $3,000 for property taxes on a condo, right? It's just different levels. And there really are different levels to this. And there are a lot of people that can afford to pay those big, heavy prices. So don't underestimate that.
Yeah.
But yeah, and when they say that those people are next, No, I think it's the people that are over leveraged on their homes.
Look at our charts.
Yeah.
How many properties every single week sell at $2 million or more?
Yeah.
And we pull out of the equation the ones that are 8, 9, and 10 million. We pull and more. We pull them out of the equation.
Yeah.
Just because it skews the numbers way too much.
If you look at our chart for where we break down the areas, the I believe it's York Mills, Bayview York Mills area, that segment, if there are 30 sales in that area, 25 of them, 26 of them are usually over $2 million.
Yeah.
And like well above $2 million.
Yes. Many times the average for that area is over 3 million.
Yeah. Right. Exactly. So yeah, it's okay. I guess I'll get into that other related question. So Valorian asked, who is buying $2 million homes? The CRA and RCMP needs to be looking into that. Again, I think
why does the CRA, RCMP
see, I think this is one of those situations, like they're just not understanding that people have a ton of money. And $2 million, like we deal with people, we're currently working with people who have successful businesses.
They're high net worth individuals.
And
they just
and
have
they can afford
a lot of money.
These kinds of homes, right? And a lot of it, it's not, they're buying this $2 million home with, $400,000 down. They're buying it with $1.2 million and they're getting a mortgage for $800,000, more than that.
Here's something that's going to blow your mind. Some of those people buying $2 million to $3 million homes are downsizing.
Yeah, that's true.
Imagine
that's
that.
Actually true.
They're paying cash there, and they're struggling to downsize.
Yeah, that's actually
to
very
a $2 million home. Like, where are we going to put all our stuff? It's so small.
That's true. So yeah, again, like I mentioned for the other comment, I'm sure there are people that have purchased with very obscure ways where the CRA and RCMP would need to look into, but I think
that's the minority.
I think the vast majority, I think the vast majority are just really high net worth people that live in the city. But anyways, next comment here comes from the Spider 699, and they say, "Good evening, Santo."
Good evening. How does he know it's evening?
Well, he commented in the evening, so good evening. Sorry, he said Santos. Is it?
It's the only one I don't like.
Just
call me everything else. That's the only one I don't like.
Good evening, Santos. Is it possible that these condos will adjust after the price of homes are more stable, and condos will adjust with the bottom price of home like a cycle? So what I think they're asking.
Yeah, thank you for explaining.
Yeah, this one a little bit confusing, but what I think they're asking is if once home prices are more stable, the condos will kind of find its spot that links it back to home prices, right?
I don't think so. I think
you don't think that's what he's asking, or you?
Oh no, sorry. I'm trying
answering the question.
Trying to answer the question. Look, a lot of home buying and selling decisions are based on public sentiment, public confidence, public sentiment. How do they feel about what they're doing? And so that's similar for both homes and condos. So if confidence goes up, it goes up. Confidence goes down, it goes down. However, they're two individual markets, the freehold versus the condo market. The condo market has its unique set of circumstances where the supply is just enormous, where the freehold market doesn't have that. And if the builders on both sides of that, the freehold and the condo, jump back in because they've paused their projects, if they jump back in and start producing in a year or two, we'll see a whole bunch of freehold properties being available. But, there's no condo building that gets built in less than 5 years. So it's still, that problem is going to be around for a while. But right now, it's the opposite. We have a ton of condos, relatively speaking, when we look at the supply of freehold.
Mm-hmm. Yeah. So I think I think because of the fact that it's two different problems in the markets that he's talking about, like that's what makes it not joined, right?
Yeah.
So it's a very different problem for condos than we're seeing for detached.
They're their own markets.
freeholds.
They're separate markets. They're their own markets, their own months of inventory.
Yeah.
But even the product,
Yeah.
there's a lot of freehold sitting out there that still a lot of people would like to own.
Yeah.
There's a lot of condos available for sale that even if the public felt confident to buy, they just don't want to buy a lot of them that are available for sale. They're just too small.
Yeah.
Just a unique set of circumstances for each market.
Fair. Okay, so next comment here comes from Bobby Joe 4726, and Bobby Joe says, "We want to know who is selling condos. Are foreign buyers leaving, or is it domestic people who got sucked into the market?" I think that we are seeing a mixture of both. But one thing I would say is for the domestic people, one thing we're noticing is that people that are looking to upsize that are in a condo, it feels like what we just talked about, how the gap between freehold and condos, like it's two different problems. So I feel like there are people that had plans to maybe get into a freehold after their condo. They're trying to get out now because maybe they're of the belief that things are going to get much worse for condos. And while things may get bad for freehold, they might not get as bad because, again, there's two different problems.
Some of them are moving up. Their plan might have been next year or the year after to buy a freehold. Some of them are moving that forward because the condo, they know it's just less and less.
Yeah.
In their mind, they're feeling prices are going to continue to go down.
Yeah. So I think that's part of the people that are currently on the market trying to.
Let's look at this, because the question was who's selling.
Yeah.
So here's how how I see this question or the answer. Whether they're foreign or domestic, I don't know if that is the angle I want to take it from. I want to take it from that the majority of condo purchases that were pre-construction, the majority were investments, meaning the purchaser was not planning to live in there.
Yeah.
They were going to rent it out, or they were going to flip it before it actually closed or after it closed. Whatever the case, it was an investment. That investment no longer makes sense. So they're selling. Some are selling because they're forced to. They actually cannot close on it. And others are selling because the actual investment doesn't make sense.
Yeah. So regardless if it's foreign or domestic,
yes,
that's the situation
lots and lots of domestic buyers that bought a condo as an investment.
Yeah. Okay, so next comment here comes from Sue Lee 5978.
Sue Lee.
Sue Lee says, "I would be so happy to accept an offer that is just $100,000 less. Are you kidding me?" So in our, I believe it was a Toronto video for this week, we were talking about, or no, was it Toronto? I forget which. No. I think it was the York Region video. New York Region video. And we're talking about how, basically egos kind of get in the way, but if you're given an offer that you don't like, depending on the circumstance, a lot of times it makes sense to send a counter offer because you have to know where that person was going to be, right? So like we got an offer that was $100,000 less and we ended up selling the property for $10,000 less.
Correct. Sometimes the
buyer's just fishing there.
Is testing the seller, and why can't the seller test the buyer back?
Yeah. But it depends. It depends on the situation, Sully. If you have someone wrote this in the comments too, if you got a $4 million property, $100,000 less isn't that big of a deal. But if you have a $400,000 property, $100,000 less is a pretty big deal, right?
For sure. But it's all relative to market value of that home. Like you say, I would have happy take $100,000 less. Well, let's assume what it's being sold at is the current market value. And that's always changing, and that benchmark keeps moving.
Yeah.
But let's assume that that's what it is. If that's the best offer they could get, then that's the best offer.
Yeah. Someone commented also that we shouldn't be greedy and we should have just taken the offer $100,000 less. I wonder if they would have commented that if they were the one selling. But okay, next comment here comes.
Actually, I want to say something. There was I'm not sure if you're going to bring this up, but I read a comment where somebody said, just automatically offer 20% less than what they're listed at. Like, if that's I got to say, when I read comments like that, I go like this, like, please.
But that's someone that's
don't take that advice. Yeah. That's
someone that's not trying to buy.
Yeah. And if they are trying to buy, you're not buying.
Yeah.
You're not buying if that's just automatically 20% less. You got to get lucky that you're putting an offer on a property that's priced 20% higher than what it should be. And the seller is aware of that. Because if it's a new listing, good luck.
And where that strategy really falls flat is there are a lot of overpriced listings.
Yeah.
So if you were to offer, your automatic 20% less, chances are you could be paying a little bit more than what you should be paying for that house. So
it's every listing, it's its own unique situation. What if they're
okay, Dad? Sorry, I just realized we're giving them the extended version.
Oh, okay.
We're at 37 minutes. So okay.
What?
Yeah, you guys will get an extended version because hint, you're not getting.
Are they paying extra?
You're not getting a Sunday video next week, so we'll give you an extended one today.
Are they paying extra?
So it's next comment here comes from ALS 1035. Yeah, sorry to cut you off, but I
not sorry. I think you're saying.
Dawned on me that it's a 37 minutes, so I'm going to try and run through these last few a couple quicker. So ALS 1035 says, "This happened to me about 30 years ago. I was insulted by a lowball offer on my listing. My agent urged me to counteroffer, but I said no. Now seeing this, I believe it was a mistake, and I may have been able to sell sooner if I had."
We'll never know, but maybe.
Yeah.
What does it hurt to counteroffer? The buyer is testing the seller. Why not test the buyer?
Yeah, exactly.
We handle transactions on both sides. We handle them on the seller side. We handle them from the buyer side. And we've got a pretty good handle on strategies on both sides.
Yeah.
So when we see things happening kind of, I'm not going to say against us, but when we're on the other side of the table, we have a pretty good handle where they're coming from.
Yeah, you get a pretty good vantage point for both sides. But okay, and we'll end here with our friend Lise Roy, who says, "Good afternoon to my favorite show."
Good afternoon.
So thank you guys again for watching. That concludes our show for today. Please leave you know what? I have to start saying this at the beginning. Okay, I'm going to clip this and put it in the beginning. But leave your comments in this show and the shows throughout the week. Leave your questions and you could be featured on the show. Because some people ask, like, how do I get on the Sunday show? And I'm like, maybe you don't listen till the end to find out how. But yeah, leave your comments below. And chances are you might be on the Sunday show. So thank you again for watching.
And if you want to get on a Sunday show, we take gifts, we take money. Try.
I'll put the e-transfer link on the link below.
Give us 20% less than you thought you were going to give us.
So thank you guys for watching. We won't have a Sunday show next week. It's going to be a bit of a modified schedule next week. But
they're on a need-to-know basis.
Okay, so
we don't know our full schedule yet.
But yes, thanks for watching and have a great Sunday.
Have a great day. Bye-bye.